All right, so we've got this whole stack of articles here about what the SEC's been doing with ESG investing and regulations. You set these over. Looks like, wow, a lot happened in 2024 and 2025.
Yeah, definitely been some busy years.
So let's unpack all this. From what I see, it looks like you're trying to get a handle on how all these changes affect companies and investors,
Right.
but most importantly, what it all means for you, right, going forward.
Exactly. Yeah, that's the key question.
So I guess we're on a mission here to kind of decode the SEC
Mm-hmm.
and cut through the political spin. I see a lot of strong opinions in these articles.
Yeah, definitely.
And then make sure that you come out of this with, all the knowledge you need to navigate this new world.
Exactly. We're aiming to arm you with the insights you need to confidently navigate this new landscape.
Yeah. Okay, great. Well, I've been looking through all this stuff, and just from a first glance, it seems like, especially with the new acting chair, the SEC is really hitting the brakes on what had been a pretty fast-moving train in ESG investing, I mean.
It does seem that way.
Remember, like, not that long ago, BlackRock and Vanguard were all over the headlines, pushing companies on climate goals and diversity.
Oh, yeah, absolutely. They were leading the charge.
Well, it looks like that kind of the very assertive engagement is getting a lot harder now.
It is. It's definitely becoming more complicated. I think a big part of that is how the SEC is redefining passive investing. Because, if you own over 5% of a company's stock and then you start advocating for ESG changes,
Right.
even just subtly, you could trigger stricter reporting rules.
Oh, interesting.
And that's a big change.
So the SEC is basically saying, if you're going to act like an activist, you got to play by the activist rules.
That's a great way to put it, yeah.
Okay, but what does that even mean, play by the activist rules?
Well, we're talking about Schedule 13D here, and those rules are a lot more demanding when it comes to disclosures and timelines.
Okay.
It's not just about filing a form. You have to reveal your intentions in a lot of detail.
Right.
And then constantly update the SEC on any changes to your strategy.
Wow.
It's a whole other level of scrutiny.
Yeah, I bet.
And that can really make investors think twice before they engage with companies on ESG goals.
No wonder we're seeing all these reports of these big investors like BlackRock and Vanguard again, getting cold feet.
Yeah.
Weren't there even stories about them canceling meetings with companies back in 2025?
Yeah, there were.
Because they were so worried about accidentally triggering these stricter regulations?
That's exactly what happened. It's a big shift in the landscape.
I mean, I get it. If you're one of these giant investment firms, you've got to weigh the legal risks.
Right.
And the potential for just mountains of paperwork against the actual impact of your ESG engagement.
Right.
It's a complicated calculation for sure.
It is a very complex calculation.
So less pressure from the big players, at least for now. What does that mean for the companies themselves? Are they kind of off the hook now when it comes to ESG?
I'd say it's definitely given corporate boards some breathing room.
Okay.
With less investor pressure, they might not feel so obligated to aggressively pursue ESG initiatives.
Okay, but hold on a sec. If the SEC is supposed to be focused on protecting investors, right?
Right.
Isn't this kind of contradictory? Because if companies start neglecting ESG risks, won't that ultimately end up hurting investors in the long run?
That's a really good point, and it's a huge debate right now.
I can imagine.
A lot of people argue that this move by the SEC could actually hinder progress on some really crucial issues, like climate change, for example.
Yeah.
I mean, think about it. If companies are being pushed to reduce emissions or invest in more sustainable practices because they don't have their investors breathing down their necks.
Right, right.
Well, that could have some pretty serious consequences down the line.
No doubt. So, all right, we've got these ESG-focused investors kind of stepping back, at least for the moment, potentially slowing down progress on some of these big issues.
Yeah.
So who's stepping into that void? Who's filling that gap?
It's interesting. We're actually seeing some activist hedge funds starting to step in.
Oh, really?
Yeah, and their motivations are quite different.
Well, yeah, they're not exactly known for putting the planet ahead of profits, right?
You got that right. They're not.
Okay, so what are they seeing in all of this?
Well, they see this shift by the SEC as an opportunity.
I bet they do.
They're more interested in those short-term gains.
Right.
And they might push companies towards strategies that prioritize immediate financial returns.
Right.
Even if it means sidelining those ESG considerations.
Okay, so that's a pretty big shift in dynamics. And it's kind of ironic, right?
It is.
Because we've got the U.S., at least on the regulatory side of things, kind of hitting the brakes on ESG. But then you look at what's happening in the rest of the world, and it's like they're going in a completely different direction.
Yeah, it's a really interesting contrast.
And you pointed this out in the articles you sent. While the SEC is, tightening the reins over here, the EU and the UK are actually doubling down, even accelerating their ESG agendas.
Exactly.
Like that EU Corporate Sustainability Reporting Directive, the CSRD,
Yeah, the CSRD.
it mandates that companies disclose so much ESG data way beyond what the SEC is asking for.
That's right.
So are companies that are operating globally just stuck in this regulatory tug of war?
It seems that way.
I mean, talk about a compliance
Oh,
headache.
it's a huge headache. Imagine, you have to report one set of ESG metrics to the SEC,
Right.
and then a completely different set, which is also much more comprehensive, to European regulators.
Ugh.
It's incredibly challenging. Logistically, it's a nightmare.
Yeah.
But also, it's a potential PR disaster. How do you maintain credibility and transparency when you're juggling two very different sets of rules?
That's a really good point. Okay, so let's break down some of these global differences.
Okay.
What exactly are the EU and the UK doing that's so different from what we're seeing here in the US?
Okay.
And how can companies even begin to wrap their heads around this tangle of regulations?
Well, I think a good place to start is with the EU's CSRD.
Okay.
Because it's not just about disclosing more data, it's about connecting that data to a company's business strategy and risk management processes.
So they're really digging deep.
They are. They're asking some tough questions about a company's impact on things like human rights, social issues, the environment,
Right.
and they want to see how those factors are integrated into the company's overall decision-making.
So it's much more holistic.
It is much more holistic, and for companies, especially ones operating in both the US and the EU,
Right.
it puts them in a tricky spot.
Yeah.
Because they're essentially facing two sets of rules, two sets of expectations, and potentially two very different stories about their ESG performance. It really does. And then you've got the UK doing its own thing.
Right. Right. And from what I saw, it's quite different from the SEC's stance.
Yeah, definitely. Like with their stewardship code, for example, it basically encourages investors to actively engage with companies on all these ESG issues,
Interesting.
which is, the complete opposite of what the SEC is saying here in the US.
So, okay, let me get this straight. We've got the SEC pumping the brakes.
Yeah.
We've got the EU accelerating. And we've got the UK basically saying, hey, investors, get in there and make some noise.
That's a good summary.
I mean, how are companies supposed to make sense of all of this?
It's a real challenge. They need to be really on top of things,
Yeah.
Understanding the specific requirements in each market
Right.
and making sure that all their disclosures and practices are actually aligned with all these different regulations.
Because if they don't.
Oh, they're risking penalties, damaging their reputation, even alienating investors.
So big consequences.
Yeah, big time.
Okay, so we've got this regulatory tug of war happening globally. What does that mean for the future of ESG investing as a whole?
Well, that's the million-dollar question.
Right.
Some people are worried that it's just going to become this fragmented mess.
Yeah.
With every country doing their own thing.
Right. And no real global standards.
Exactly. And if that happens, it creates a lot of uncertainty, right?
Sure.
And it makes it much harder for companies to operate globally.
Yeah.
And on the investor side, if the information that companies are disclosing isn't consistent across different markets,
Right.
it makes it way harder for investors to compare companies and figure out how they're really performing on ESG.
So more complexity for companies, more difficulty for investors trying to, compare apples to apples. Are there any potential upsides to all of this? Any silver linings?
Well, some people think that this regulatory fragmentation, this kind of messy situation,
Yeah.
could actually spark innovation in the ESG space.
Oh, interesting. I hadn't thought about that.
Yeah, the thinking is that when companies are faced with all these different regulatory regimes, they're kind of forced to get creative in how they approach ESG.
I see. Yeah.
Right.
It's like they need to find ways to meet the requirements in one market,
Yeah,
but without compromising their values or their sustainability commitments in another market.
exactly. And in that process, they might stumble upon new approaches, new technologies, new solutions that might not have emerged in a more homogeneous regulatory environment.
I get what you're saying. It's like, when you put constraints on a design process, sometimes it forces you to think outside the box.
Right.
And you come up with more innovative solutions that you never would have considered otherwise.
Exactly.
But at the same time, isn't there a risk that this divergence, all these different regulations,
Yeah,
could actually slow down progress on big issues like climate change?
there's definitely that risk.
I mean, if the U.S. is pulling back on ESG while other countries are pushing forward,
Right.
won't that create a drag on global efforts to address these challenges?
It's a real concern, definitely, because the SEC's actions could end up discouraging companies from taking more ambitious action on climate change.
Hmm.
And it also creates this really confusing landscape for investors,
Yeah.
who are trying to assess the true environmental impact of their investments.
Right, right. Okay, so let's sum all this up for our listener. We've got companies grappling with all these compliance complexities.
Hmm.
We've got investors who are facing challenges and actually evaluating how companies are performing on ESG.
Right.
And we've got this very real risk of slowing down progress on some critical global issues.
Hmm.
So where do we go from here? How do we make sense of this? What can we actually do?
Well, I think the first step is just recognizing that ESG is not a niche consideration
Yeah.
anymore.
It's not just a fad.
It's not a fad. It's not going away. It's a core element of the investment landscape.
Right.
And it's being shaped by all these complex forces. You've got regulatory forces, you've got investor demands, you've got global challenges.
So burying your head in the sand is not an option.
No, it's definitely not an option, whether you're an investor or you're a business leader.
Mm-hmm.
You need to be informed. You need to understand what's happening. You need to understand all these different regulatory frameworks.
Mm-hmm.
And you need to be prepared to adapt your strategies to this new reality.
Okay, so let's get practical. For our listener who's, listening to all of this and trying to figure out what to do,
Hmm.
what are some concrete steps they can take? Where do they even begin?
Okay, so let's start with investors.
Okay.
If you're passionate about ESG and you want your investments to align with your values,
Yeah.
don't be discouraged by what the SEC is doing. Don't give up.
Right.
Remember, collective engagement can be a really powerful tool.
Okay, remind us what that is again?
So we're talking about initiatives like Climate Action 100 Plus,
Okay, yeah.
where investors basically join forces to engage with companies on climate change.
Right, right. So working together.
Working together, presenting a united front.
Yeah.
And there are a few key benefits to this approach. For one, it allows investors to pool their resources and their expertise so they can really amplify their voices.
Mm.
And it also helps to reduce their individual compliance burden, which is a big concern right now with all these new regulations.
Right, right. So it's a way to stay active in ESG engagement, but without running afoul of all the rules.
Exactly. And it sends a really strong message to companies that investors are serious about these issues.
Yeah, there's power in numbers. Absolutely.
Absolutely. Another crucial point for investors is to really focus on the financial materiality of ESG issues.
Okay, break that down for us.
So the SEC is really focused on investor protection and market stability, right?
Right.
So when you're raising ESG concerns with companies, you need to frame those concerns in terms of financial risks and opportunities.
I see.
So instead of just saying, we think climate change is bad,
Right.
you need to be able to say climate change poses a significant financial risk to this company's long-term profitability. And here's why.
Ah, so connect the dots, make it real.
Exactly. You need to make that connection and present a clear, data-driven argument,
Right.
because that's the kind of language that's going to resonate with the SEC.
It's speaking their language.
Exactly. Okay, so we've talked about investors. What about companies?
Yeah, what about them?
What can they do to navigate these complex regulations and make sure they're meeting the expectations of all their stakeholders, both here in the U.S. and internationally?
Well, it's got to be tricky.
It is.
So what's your advice?
Well, I think the first and most important thing is not to fall into the trap of thinking that the SEC's shift means you can just ignore ESG altogether.
Right.
I mean, consumers are still paying attention. Employees are still paying attention. International investors are definitely still paying attention.
Yeah, they're not going away.
And they're all holding companies accountable for their social and environmental impact.
So ESG is still very much on the table, even if the pressure from U.S. regulators might be easing up a bit.
Exactly.
Okay, so what should companies be doing?
Well, they need to double down on their commitment to transparency and consistency when it comes to ESG reporting.
Okay.
And that means making sure that their disclosures align with both U.S. and international standards.
Even if it takes a lot of work.
Even if it takes a lot of work. And, there are some really good resources out there to help them do that.
Like what?
Well, there are frameworks like the GRI and ASB.
Right, those reporting frameworks.
Exactly. They provide this kind of common language for ESG reporting.
Yeah.
Which makes it easier for investors to compare companies,
Yeah.
see how they're doing.
Apples to apples.
Exactly. And they also help companies to make sure that their disclosures are comprehensive and credible and relevant.
So transparency, consistency, and using these recognized reporting frameworks.
Mm-hmm.
That's the recipe for companies to navigate this.
I think so. But there's one more thing I think companies should be focusing on.
Okay, what's that?
Cybersecurity.
Cybersecurity. What does that have to do with ESG?
Well, it's becoming increasingly important, especially with all these new regulations coming out.
Right, the SEC has those new rules about cybersecurity, risk management, and reporting breaches.
Yeah, and those rules have really raised the bar for companies. They
Hmm.
have to have these really robust systems in place to protect sensitive data, to detect breaches really quickly, and to respond effectively.
And if they do have a breach,
Yeah,
they have very tight deadlines for reporting it.
very tight deadlines. So companies need to be much more proactive with their cybersecurity efforts.
So it's not just an IT issue anymore.
It's not just an IT issue, it's a core element of ESG now.
Wow.
And it's a really critical factor that investors are considering when they're assessing a company's overall risk profile.
Okay, so we've talked about concrete steps that both investors and companies can take, but this is a really complex landscape,
It is.
and it's constantly evolving.
Mm-hmm.
So for our listener, what are some key things they should be watching for as this whole situation unfolds? What are the wild cards?
Well, one crucial factor is what happens with the courts.
The courts?
Yeah, how are they going to rule on the SEC's climate disclosure rules?
Right.
Because there are already a bunch of legal challenges underway.
Yeah.
And a court decision could either really strengthen the SEC's stance,
Mm-hmm.
or it could completely upend the current regulatory landscape.
So it's a huge wild card.
It's a huge wild card.
And if the SEC loses, it could create a lot more uncertainty
Oh, absolutely.
and potentially even open the doors for a more aggressive approach to ESG regulation in the U.S.
That's right. So that's one thing to watch. Another interesting development is the rise of retail investors.
Oh, yeah.
Because they're increasingly interested in ESG,
Mm-hmm.
and they're really starting to use their voices to advocate for change.
I've noticed that, too. It's like a whole new wave of activism.
It is.
So while the SEC might be trying to tap the brakes,
Yeah.
the momentum for ESG could actually be sustained by this groundswell of support from individual investors.
Exactly. And these are investors who are really passionate about aligning their investments with their values.
So it's a fascinating shift in power dynamics within the investment community.
It really is.
And who knows how it's all going to play out.
Right. It's hard to say.
Okay, so we've got the courts, we've got retail investors. Any other wild cards we should be aware of?
Well, one thing that hasn't gotten a lot of attention,
Okay.
but could be a big factor going forward,
Mm-hmm.
is the role of technology.
Technology.
Yeah, technological innovation.
Interesting. How so?
Well, we're already seeing all these new AI-powered tools
Hmm.
that can help companies to analyze ESG data, to assess risks, to track their performance.
So it's like automating some of the heavy lifting.
Exactly. And these technologies are only going to get more sophisticated, more powerful.
So they could play a really key role in helping companies navigate all these complexities.
Absolutely. And it's not just companies. These tools can also empower investors.
Oh, how so?
Well, they can give them more sophisticated ways to analyze companies,
Mm-hmm.
to compare their performance, to make more informed decisions.
So it sounds like we're really just at the beginning of this journey.
I think we are.
And the next few years are going to be really critical in determining how this whole ESG landscape ultimately evolves.
You're absolutely right. We're at this pivotal moment,
Mm-hmm.
and the choices that we make today
Yeah.
are going to have the huge impact on the future of business, on the future of investing, on the future of our planet, really.
Wow, this is a lot to take in. We've been through all these articles, learned so much about what the SEC's been doing. But before we wrap things up, I want to make sure we distill this down into something actually useful, for our listener.
Absolutely. Let's bring it all back home, connect it back to your situation.
Right? Because it's one thing to understand the big picture, but then it's another thing to say, okay, so what does this actually mean for my investment strategy or for my company's approach to ESG?
Exactly. So let's do a quick recap here. The SEC, especially under Acting Chair Yeda, has really gotten stricter about what counts as passive investing.
Right?
And that's had a big impact on how those big players like BlackRock and Vanguard are approaching ESG engagement. They're a lot more cautious now.
Yeah, they don't want to get tripped up by all the new rules.
Exactly. And then you've got this whole other layer of complexity with the EU and the UK basically going in the opposite direction. They're pushing for even more ESG disclosure and action.
Yeah, it's a real tug of war.
It is. And if you're a multinational company, you're right in the middle of it.
You got to be flexible.
You do. And you have to understand both sides. Like, on the one hand, you've got the SEC's climate disclosure rules, but then you've got the EU's Corporate Sustainability Reporting Directive, the CSRD, which is way more demanding.
I mean, I'm just picturing this company that has to report one set of ESG data to the SEC
Mm-hmm.
and then a totally different set, a way bigger set of data to Europe.
Yeah.
That just seems like a logistical nightmare. and a PR headache waiting to happen.
Oh, absolutely. And that's why transparency and consistency are so important, even when the rules are different in different places. Because if your ESG reporting looks totally different depending on who's asking,
Yeah.
that's going to raise some eyebrows. It makes people wonder what you're hiding.
Makes you wonder if companies might just start using the strictest standards across the board. You
Yeah,
know,
it's
to keep
possible.
things simple.
Yeah, it might be easier to just have one really comprehensive ESG strategy
Right.
that meets the highest bar, rather than trying to tailor your approach to each individual market.
Makes sense. Now, we also talked about how this whole SEC shakeup is creating opportunities for new players to come into the ESG space. We mentioned the activist hedge funds, but there are also all these consulting firms popping up
Oh, yeah, tons of them.
and ESG data providers and even tech platforms that are using AI to help companies navigate all these new regulations. It's like a whole industry has sprung up around ESG compliance and strategy.
It really has. It's a booming business.
It's wild. Remember, like, back in 2023 when everyone thought ESG was this simple, feel-good thing?
Yeah, those were the days.
Now it's like the Wild West out there. High stakes, lots of uncertainty.
It definitely feels that way.
And all this complexity, it kind of reflects this tension that's at the heart of this whole debate.
Okay, yeah, tell me about that. What's the tension?
Well, on the one hand, you've got this growing demand for companies to be held accountable for their ESG performance.
Right, investors, consumers, employees.
Everyone wants companies to take responsibility for their impact on the world.
Yeah, that's definitely a trend we're seeing.
But then on the other hand, you've got this concern about regulatory overreach.
Ah, okay, so you've got the push for accountability, but then also the pushback against too much government intervention.
Exactly. And the SEC, they're walking a tightrope. They're saying, look, we're here to protect investors and make sure the markets are fair. But we're not here to dictate social or environmental policy. They don't want to overstep their bounds.
I see. It's a delicate balance.
It is. So where does that leave our listener? What can they actually do to navigate this new world?
Okay, so if you're an investor and you really care about ESG, don't get discouraged just because the SEC is changing things up. There are still ways to make your voice heard. Collective engagement is one really powerful approach.
Right, banding together with other investors who share your values.
Exactly. Things like Climate Action 100 Plus, where investors work together to engage with companies on climate change, that kind of thing can be really effective.
Yeah, and it helps spread the burden too, right?
Definitely. You're pooling your resources, your expertise, and it reduces the compliance burden on any one individual investor.
And when you are engaging with companies, it's important to make your case in a way that aligns with the FEC's priorities.
Right, you've got to speak their language.
Exactly. Focus on the financial materiality of ESG issues. Connect the dots between a company's ESG performance and their long-term financial risks and opportunities.
That's the sweet spot. That's what's going to get their attention.
And you know what's interesting? This whole situation might actually lead to more innovation in the ESG space.
Wait, I'm not sure I'm following. How does less regulation lead to more innovation?
Well, think about it. If the traditional ways that investors have been putting pressure on companies, if those are getting more restricted, people are going to have to get more creative.
Right. They're going to have to find workarounds.
Exactly. We might see this whole explosion of new approaches, new technologies, even new business models that pop up in response to this.
You've got a point. Necessity is the mother of invention, right?
Exactly. And that's something we're definitely going to be keeping an eye on. Speaking of keeping an eye on things,
Yeah.
one of the biggest wild cards here is what happens with the courts. How are they going to rule on the SEC's climate disclosure rules?
Right. That's a huge unknown. And it could really change the game.
Absolutely. And that uncertainty just makes it even more important for everyone, investors and companies alike, to stay informed, to be flexible, and to be prepared to adapt as things unfold.
I couldn't agree more.
Well, I think we've done a pretty good job of unpacking all of this. We've covered a lot of ground, from the SEC's new rules to the global debate over ESG standards. We even touched on the potential for innovation and all those wild cards out there.
Yeah, it's been a real deep dive, but I think we've given our listener a solid foundation to navigate this complex landscape.
Exactly. And at the end of the day, that's what matters.
Absolutely, because this is an ongoing conversation and it's important to stay informed.
Well, thanks for joining us on this deep dive. Until next time.